Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping back down into the world of Bitcoin. We'll be taking a look at the micro movements, only taking a look at the hourly chart and giving you my thoughts and opinions on what I think is unfolding right there. We'll talk more about the macro position for Bitcoin this afternoon, so do watch out for that video. So as I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. Let's jump right down into this one. So as you can see, following on from yesterday's video, we did actually go down and hit those targets that we were talking about yesterday, and we also have hit some very interesting developments with Bitcoin. So I'll put an arrow here for the next thumbnail and we'll see what that looks like. But for now, let's jump on down into these structures that are emerging, right? We're going to start things off with Elliott Wave theory, then jump over into smart money concepts. So what do we see? Well, yesterday we were talking about this range down here. This was 28,186 to 28,609. This is your typical area that we were looking for to complete a fifth wave movement, which we actually hit into down here. And this was actually pretty reasonable. Okay, we came down a little bit further and we were talking about maybe just finishing around here, but the development of the structure here also means that we were looking at this as a potential diagonal and it was overextending down. So although we came into this target and we got a significant bounce when we did hit this low at 28,334, it didn't hold and we ended up moving down quite significantly, and we went past that 1.618 trigger level. Now, this is really important for a couple of different reasons, right? So we're going to go into that right now. Okay, so as we can kind of see, we had this 5-wave structure here. We also have this 5-wave, which at the moment we have marked up as a zigzag with this one. 1, 2, 3, 4, and 5, right? So we had that marked as a zigzag. However, the recent developments down here with this overextension to the downside can allow us to look at this in a slightly different way. This ABC structure, I'm going to park that idea for now, and I'm going to take this one off as well. And the reason for this is that we have hit a 1.618 level between this Fibonacci measurement of the first 5 waves here, moved over to this one over here. You can see that we went past the 28,177. Now, if I draw a horizontal line right here, you can see that this up here did not cross this level, and therefore this puts this a scenario as a possible wave 1 over here, wave 2 to this upside here, and all of this that we're in right now is a possible wave 3 with some kind of wave 4 to bounce, and then some kind of wave 5 to the downside later. Okay, so we can see that there's this idea that actually we're nesting in a very big impulsive structure to the downside. This is, by Elliott Wave theory, a trend-based structure. Okay, so although we were tracking this as a zigzag pattern, that zigzag pattern has now evolved into what could be a potential rather large impulsive structure. And again, the same thing can be applied up here with a nesting principle where we have a wave 1, up here is a wave 2, and again this is higher than this. All of this that we're in down here could be a wave 3, then followed by another wave 4 and wave 5. So you can start to see that there could be our little wave 3, up into a wave 4, and then down into a wave 5. Now, the importance of this is very, very critical because, again, a lot of people will look at this without understanding Elliott Wave theory and will just go in and draw in a head and shoulder pattern. And you would see that right in here, left shoulder, head, potential bounce, and right shoulder, right? Like this. And you'd see this pattern, and then, of course, that would be taking you down into these lows, right? And so a head and shoulder pattern essentially is a reversal pattern that we see here from an Elliott Wave theory point of view. Only thing with Elliott Wave theory is it's a lot more descriptive over the micro movements of what you would expect to see within inside it. So here we have a potential scenario that's going to take us down very, very deeply in terms of Bitcoin, because if we start with 5 waves, we end in 5 waves, and this could be a very big zigzag, or it could be something rather sinister. We kind of talked about this yesterday. So let's take a look at this fifth wave movement here on this micro scale and figure out whether or not this is over, whether we finish this structure or not. So if we look at this thing, we can kind of see that we had a move here, we bounced up, then we had a move down here, then we've had a move up, and then we've come down. I think looking at it, it looks like it has theoretically kind of run its course. It could potentially just push down a fraction more if it really needed to, but it doesn't look like it has terribly too much more left in the tank. The low at the moment is 27,815 according to Binance data here, and I still think that's possibly a little bit lower. If we zoom over, we can see that we're right up in this support range that we're in previously. So I'm expecting a move to the upside. I think a long position here is kind of on the cards or on the table. I just can't quite scope out the perfect spot for an entry just yet. I will be looking at that more in detail today. So if this is a diagonal, I think it could be a expanding diagonal. Let me bring this up, draw the trend lines in to just help display this. We can actually probably pull this in down here just a little bit, and we can see it's kind of expanding out like so. Okay. Now, on that, we would have to look at this as a wave 1 up to here for a wave 2. This would be our wave 3. This would have to be our wave 4. And then we come down into that 5th wave. So it could still come down a fraction more if it's expanding. To be fair, that wave 4 would potentially be a little bit bigger than this under an expanding. So it could just be a regular diagonal. We'll just check the principles on that. No, it doesn't really meet the requirements to be in a regular diagonal. So I would say expanding is the way to go, and just a little bit unusual on that wave 4. So yeah, I think anywhere around here seems to be pretty decent. If I was to go long, I would be looking for a better entry. I think we're almost there, but not quite. So yeah, keeping a close eye on how that's going to develop. But for the most part, I think we're coming in to the end of this particular structure, and we should start to think about that 4th wave movement. So for example, wave 1, wave 2, wave 3, somewhere around here, and then up into a wave 4. We'll probably find ourselves testing this previous area of support, and then we'll come on down. We should not have overlap. Okay, so let me go ahead and grab some of these fundamental lines. I'll just throw them on here. We cannot cross higher on this 4th wave. Okay, up here higher than the 29,096. Okay, so that would create a problem. We can't do that. Okay, so we should be expecting it to stay below that level. And normally you'd go to 38.2, which would put us at about 28,600. So we would be looking at this particular level right here. What I'll do is I'll move these over here so we get a better idea. Okay, so that would be kind of what we'll be looking at there for the 4th wave movement. Just need to find the entry on this one. So if we've bottomed already, then 28,800. And if we haven't, then of course that number will change ever so slightly. But we need to stay below 29,096 to keep that valid as a 4th wave movement. But yes, Elliott wave theory looking pretty good, looking pretty progressive, and I think we're almost ready for a bit of a bounce upwards, and then another move down, and then another bounce upwards, and then another move down, and then a much bigger movement to the upside. And that next movement to the upside could be either a B wave movement or a wave 2 movement. So for example, let me show you what that looks like. If this is a big wave 1, that's a wave 2, this is all wave 3. Which will be part of this one, this one, this one, this one. So somewhere down here, then that, then this. Probably testing around that $26,000 level, something like that. Then the next movement to the upside would be a very significant one. We'll be pushing up from those lows up towards the kind of 30K level, I would have thought, 29 maybe. And the invalidation of this is basically $31,000, right? We wouldn't go up higher than $31,000, but all of that is potential for retracement to the upside. And obviously we'd have to monitor the situation as we move up to find out where we are likely to stop. One thing that would be under this structure plausible would be that you'd stay below 31,000. So with that, you can see a pretty significant run. So if you're going to go long, then really this is where the big gains are going to be. You can trade these small micro movements, but this is the one that you're really going to want to get in on if you're going to go long on the market. So ultimately, that's kind of where that one sits, right? Elliott wave theory is being pretty decent here at kind of giving us a bit of an idea as to kind of where things are going. So moving over into smart money concepts, what do we see? Well, we're bearish on our hourly chart. We can see that right there. We've obviously lost support of the 50 and 200 EMAs. We can see that there. And we've got the continuation of break of structures to the downside at a minor level. So none of that is anything too too strange. We now have a strong high and a weak low, indicating that we're unlikely to go up higher, and we're more than likely going to break to the downside. You can see here all these sell order blocks, and there's very little, in fact none, that I can see, internal buy order blocks. Okay, so we know that there's a lot of potential fear now seeping into the market, and there is of course this false narrative, in my opinion, that money's rolling out of Bitcoin into altcoins. I mean, there's going to be pockets of that, but we've seen everything bleed out. It's not like money is just bleeding out of Bitcoin and going into others. And I know the idea of looking at Bitcoin dominance, but Bitcoin dominance, to be honest with you, is nowhere near as meaningful as it once used to be. Instead, there are far too many cryptocurrencies now in play that makes that dominance number just not look anywhere near as juicy as it once was. So I don't think we're going into an alt season, and I don't think the bull run is over, because the bull run never started. I think we're in a bear market rally, and what we're looking at right now is the potential for a move to the downside that is being shown as a trend-based structure that could take us down into some very significant great, in fact, accumulation levels. Now, smart money concepts here, we've been filling out the fair value gaps, right? All those gaps that people were saying were never going to get filled, or you don't usually fill them, and all that kind of nonsense. We've been filling them nicely over the last 24 hours, and there are still more to be filled out. So it's just a matter of time. Okay, so we can see we had a really good run to the upside, and now things are coming back to the downside. Okay, fair value gaps are being filled. There's one actually up here at 30,000. I don't know how long it's going to take to go back up there and fill that, but it is what it is. Or 30,000, I should say. And we're trying to grab this one right now at 28,150. So for now, Smart Money Concepts is actually giving us a very bearish outlook, and so is our Elliott Wave theory, but obviously we can experience little rallies to the upside within the structures of Elliott Wave theory. It helps us understand exactly kind of what is going on from that point of view. I'm going to leave the video right there though, guys. If you did find this useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not subscribe? And if you haven't yet joined us in Discord, guys, check it out, linked in the description below. Until the next one, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.